let me get this started first off. Good morning, good afternoon, and good evening, everybody. It is peanut butter jelly time. That is me, PB Jelly Games. I've been around the block for a little while. Most of you guys all know me. If you don't know me, reach out, send me a hello. Tell me who you are and what you're all about. I connect with everybody. I don't care if you've got one follower or a million. Doesn't matter to me. I'm here to talk with you guys, communicate, help, do what I can to support the community. So we've got a couple of rules when I'm running this Twitter space. I'll go over them one more time for all those new joiners, and then I'll start bringing people up onto stage. Number one is respect. If you say anything that is disrespectful to anyone or about anyone, I don't care. I will mute you and I will ask you to leave. There is no place for disrespect here. Love is such a powerful thing, and if you can kind of get that and give that, you're going to be really, really strong in your entire life, I guarantee you. Number two is don't talk over people. I know we all want to have something to say. It's really important that everybody does get the opportunity to speak. So if somebody else is talking, please don't talk over them. Wait till they're done their train of thought, and then you can jump in. That does put out another point. If you are making a train of thought or commentary on something, please keep it to within 2 to 3 minutes. Don't drone on and on and on to try and hammer your point home. Let people understand your point and do with it as they will. That'll just help with getting more people up and having the conversation be a bit more spread out between a lot of people. Number 3 rule is facts first, please. If you're coming in with tinfoil hat theories that, the lizard monsters are coming after us and they're the ones who are bashing the stock and destroying it, et cetera, I don't really want to hear that. It definitely belongs in a different place. And then number 4 is one topic at a time. So if somebody is talking about a particular topic and brings up a question and you want to get your answer in there, great. Please don't drive that answer into a whole nother question. It's not the time for it. Wait until it's a good time for you to ask a different question on that topic. So those are pretty much the only 4 rules that I can think of. Other than that, it's just respect, right? Goes right back to rule number 1. So I'm going to go and get people up here. I've got a couple of people who I know very, very well who have joined us in here. JP, welcome, my friend. Thank you so much. I see so many awesome names in here. Love you guys. I really do. And America's Money Company. Welcome, my buddy. How you doing?
PB, that intro was unbelievable. Couldn't have done any better, man. From the very start, that's the energy I love about you, and then just the positive vibes you put out are, the best.
Did you like my good morning, good afternoon, or good evening?
I did. I was like, wow, I really need to learn how to do that.
I've been using that since my Minecraft YouTube days. That's the classic PB Jelly intro. So I figured it works. Why fix it if it's not broken, right?
Absolutely. Yeah, man. Thank you so much for having me up here. As most of you probably know, I'm not a DD guy, but I'm happy to jump into any of the TA stuff, and the TA stuff that revolves around DD, I guess, is kind of my wheelhouse a little bit too. But no, I definitely don't know everything, and I'm happy to learn. Just can't wait to be a part of this.
No problem. Well, we're happy to have you here. That's for sure. And, JP, I'll give you guys a little bit of my sort of belief on JP. I'm just reconnecting here. Number one, JP is really, really good with options. He knows the options chain. He knows the implied volatilities. So he understands the market from that framework and that point of view. And it really ties in. And I think, that's what I want this to be, is for everybody to come up, ask your questions. Everybody, if they've got a level of expertise in a particular area, should be able to answer it, because the market, the financial market and the system that we have is so widely interconnected. When people look at it and say, oh, they're just ladder attacking our stock and it's only the shorts that are bringing our stock price down, it's not as simple as that. It goes far beyond that, where you have to pay attention to, okay, what's the options chain look like and how does that impact the stock? How does that impact, the volatility that we're seeing? How does that impact the psychology of the rest of the people, the non-apes that are out there buying and selling? So we have to be able to have those broader conversations if we're really going to be able to find our way around this market and find a way to, manage it the way that we want. The big guys, they've got all the power and the authority right now, and they've got all the money to do with what they want. But we've got eyes, we've got bodies, and we have our own money. And I guarantee you collectively, if we can come together and learn the right information, we'll start making decisions in tandem without colluding, without manipulating, and those decisions will turn things to our desires. That's my personal belief.
I couldn't agree more. I think I've stemmed on this a few times. I've never learned so much in such a small period of time. And, I thought I knew a lot about the options market, but the questions and everything else that everyone's had to add, I mean, it's nuts how quick. I think the entire ape community is learning things at just an exponential growth factor rate too. And I think that'll all stem into why we'll all take something really, really good out of this whole experience on top of, obviously, hopefully some massive, massive gains.
For sure. For sure. Oh, by the way, can I request something of everybody? If you guys haven't done so, and I'm going to tell you the trick to getting eyes on things, getting eyes in you. And I'll tell you the reason why I want you to do this is because if we can share some really good information out here, then more people learn. As Jake was talking, or as JP was talking about, more people will get the real details, the facts first, and have a better understanding of the environment. And so what I'm asking you is, for that particular reason, not for me, but for that particular reason, if you guys can all go out and all you got to do is click on that little share button down at the bottom and just share that out. Share this Twitter space out. Let's get some eyes in here. Let's get some ears in here. And the other benefit of that is we get more people jumping in and asking questions. And that is what I want. So, Fafa, how you doing, buddy? You're a speaker. You can speak.
I know. I was actually getting ready to actually send a link to let everybody know that you're having the space. Sorry.
No worries.
I'm very appreciative that you're doing this, and JP, I'm glad you're a part of this. I actually wanted to bring something up actually that I got just a little while ago about the us shareholders and how the numbers, someone's saying that the numbers have gone down to 67% of non-institution holders. And I wanted to bring that to your attention and see what your thoughts are on that, because I believe that that's not exactly accurate, but it came from a screenshot from Fidelity. So I wanted to see if you could look at what you thought on that, and so other people don't get misconstrued on that the numbers are going down, because I don't believe that's actually 100% accurate. I think our numbers, like Adam Aaron said, were still high for basically shareholders, basically apes and non-institutions. So what are your thoughts on that?
Okay, you may not like what I have to say, but I'm going to preface it by saying everyone question for themselves right now, what value do we get from having high numbers, right? And I know that there's the absolute value, which is that means more people holding, more shareholders. And of course, that means our floor will be higher when the time comes. However, are we really afraid if we're at 67%? Do we need to be upset or worried or concerned if we've lost some paper hands? Because in every cycle of the stock, I truly believe this, is you're going to have those people, and look at Tesla, and JP can probably speak to this as well, because I know he talks about it quite often. But if you look at Tesla, it went through patterns of ups. And in every one of those patterns, anytime that it depreciated or went down, yeah, you lose off a bunch of the paper hands. But then the next time it rips up, you gain more. And the strength of the community is in developing the strong, the diamond hands that are there. And that's why I do these why I want to do these DD calls, and why I do the DD, is so that we don't get afraid when information like that comes up. Now, to the actual number, I cannot speak to that. Number one, I'll say Fidelity would probably be taking those numbers from their own internal processes. So if you imagine where maybe just put a hypothetical in there. If Fidelity had 100% of the apes as buyers, and there were no apes on any other platform, so just imagine this for a second. Let's say that there was only, 5 million apes out there, and we all only bought from Fidelity. Now what happens? Fidelity puts out and they say, hey, the retail shareholder has 100% of the float. They own it all. But they're only basing that off of their internal metrics. Now, what happens if the next day we learn that Fidelity uses PFOF and we just decide, you know what, we don't want to support Fidelity anymore, and 70 or 80% of us leave and go to a different platform? Now, Fidelity puts out a new number and says, hey, guess what, guys? The apes have gone. They've all sold. But in reality, we didn't. We just transferred over to a different area. So that's number one when you're thinking about DD, is don't restrict yourself to just the simple argument of it. Think about, okay, why is it good? Why is it bad? And then go to find the fact. And sometimes the fact will lead you to, hey, you know what? That's the reality. The reality is during the downtrend from 70 to 30, and I'm not saying this is the case, I'm saying don't be afraid of it, even if it is. But if we went on that downtrend and lost a whole bunch of retail investors, is that really a bad thing? Can we get that back? Are we done the battle? Did we lose the war? No, we certainly didn't. And that's my take on it. So the other thing that I'll point out in regards to that as a comment, and then I'll let you jump back in, Fafa, is the idea behind this. We sometimes like to get ourselves trapped in the mentality that we're the only ones on the planet. And I've spoke about this. It's a common human emotion. It's social dynamics, if you understand those. We want to be the center of our own universe, so to speak. And sometimes that expands out to believe that when Adam Aaron says there are 4.1 million retail and non-institutional investors holding AMC, we translate that into they're all apes and they're all diamond hand apes. But I've been preaching this for, probably the last 3 months, is that's not necessarily the case. There are a lot of swing traders, day traders, momentum traders, and a variety of other, even general investors who are just like, yeah, you know what? I got in because it's on the uptick. And then they say, well, no, I have no passion for AMC. I just want to make money. And they pull out. So when we're looking at that 4.1 million number, I wouldn't advise people to just say that's all apes, because thinking about it like that puts us in a position where we look at this 67% mark and then we get scared. And we don't need to get scared. We have our convictions. We know the price is holding. The price is held upwards of $28. Like, this is in the mindset of the shorts. They want it to go quite potentially down to $1. So we're winning. Anyway, that's what I have to think about that. That's what I have to say. You had another comment to make there, Fafa.
Well, I just wanted to say that I agree with you 100% because I don't believe that, like you said, Fidelity has every number outside of Fidelity, because we've seen people throw up the Fidelity purchasing between that and selling, and we know the percentages has always been pretty high to the buy side. But them throwing out the number of 67, like you said, I agree 100% that it's just probably what's been active on Fidelity. I don't think that we've lost 14% or whatever we could throw out the number of people selling. Now, yes, there are day traders. We know that people go in for momentum swing trades. And you're right, 4.1 million. I think that probably 15% of that 4.1 million are doing the day trades. There's probably a lot more that we don't know of that are probably doing that. But I honestly believe it's 100% accurate that we won't see a drastic drop like that unless if it's just from a specific venue where you can purchase from, because they don't have everybody's numbers. And I just wanted you to touch on that because I think it's important for us to not get dissuaded by a drop in percentage like that. And I think everybody needs to have that strength, knowing that that's just one platform.
Agreed. JP, you have any other thoughts?
Yeah, you know how I feel. I'm definitely in the same boat as you. The ape community is these diamond-handed people. They just don't sell, and that's the beauty, and that's why the stock will continue to rise. But the reality of the situation is there's many perma bears who will just always short the stock, and on top of that, there's a lot of momentum traders who will short and go long on the stock. But the underlying point that you should take away is if the apes don't sell, the stock has to go back up. Um, and that's because everything I believe is, unless you can prove there's naked shortings, even synthetic shares are on the tape, meaning they'll have to buy those shares back. And if apes didn't sell, that's 2 times the buying power. On top of that, there's the prisoner theory where, if I've shorted stocks, I'm very, very strict with my stop losses when I short stocks, because if you get caught in a short, you get squeezed. Everyone who shorted with you is trying to get out at the same time. That creates a FOMO buying situation. Um, and that's probably very similar to what I think happened in Tesla, is that they had the permanent Tesla lovers who just love Elon Musk or Tesla. They never sold. They had the momentum traders. They had the fundamental traders. But the underlying factor is that the people who loved Tesla that much made it rise from 40 to 900. And that's without any possibility of, an underlying short that was never closed, because that didn't happen in Tesla. That's beyond my wheelhouse, though. So yeah, I definitely completely agree.
Sweet. Does anybody else have any other questions that they want to come up and ask? Anything in general. I mean, we try to keep it to, the DD. Is there any DD out there that you guys have heard of that you're not so sure of and you want somebody else's take on? We've got a couple of requests coming up. Stinky and Americas. Welcome, guys.
I don't know, a few weeks ago, and I'm new to Twitter, and I feel like I found some information that someone needs to take a look at that knows what they're talking about. I showed it to Optimus. I showed it to Average Ape, and their Average Ape's been helping me on it here and there.
Sweet.
And yes.
No, I said sweet. I was like,
Okay.
sweet. That's awesome. I love it. That's where the community thrives.
Right. So my theory behind it was that our shares that we were buying were technically all these other company shares, like Warner Brothers and Universal Studios, and we're technically buying those shares somehow through Comcast, because Comcast technically owns Universal Studios and Warner Brothers. Actually, AT&T owns Warner Brothers, but obviously Comcast owns AT&T.
Mm-hmm.
So I started watching all these tickers and stuff, and I feel like I found like what they call box cars and stuff, and they did all this DD on it. If you start from the bottom of my page and start reading through all the stuff I posted, it's pretty enlightening. I feel like after you read all that, your conviction should be solider than anything else.
Interesting. So let me double check on your theory there. So is your theory that when we're actually buying an AMC share, whether it be through Webull or Fidelity or whatever other broker that you have, that it's not actually an AMC share, and that share is actually what we're buying is a WB share, and then that's allowing the WB price to skyrocket at the expense of the AMC price? Is that kind of the thesis that I'm getting?
Yeah, similar. It's all kind of grouped together somehow.
Okay.
I don't know. I'm
So
not
there
that good at
No, sorry, I
DD,
interrupted. Go ahead.
but I'm not that good at the technical aspects of everything, but
It's
I'm
okay.
just an electrician and a farmer out here in the middle of nowhere, but I feel like I found something that someone needs to take a look at and dig deeper. Well, we've done some good DD on it already.
Okay.
And
so because
Go ahead.
I see a lot of this and I don't know what your actual thesis is, I'll definitely take a quick look I don't know if you guys have put it into a concise and consolidated document. If you guys can do that, that really helps me because I can read. Well, I'm a speed reader, so, I can read a 360-page legal document in, probably about 30 to 45 minutes. So it really helps me, especially with efficiency. But there's a couple of questions that I can push you to start thinking about when it comes to following down that channel. So I know there's two things. Number one, there are baskets. And there's sort of this process called basketing. And I'm not sure about the boxcar technique, but I've heard it being talked about. I haven't gotten, deep enough into it to really understand it. But our shares, and this is one of the prevailing theories that's out there, and I think it's absolutely down the right path, with good questioning and good research techniques, is that, we have baskets of ETFs that AMC is involved in. And any time that ETF or that larger index is depreciated in value, it impacts our stock, depending on the weight that our stock holds in that ETF. So if, for example, you had three different stocks, let's call it Warner Brothers, like you said, AT&T, and AMC. Well, AMC, everybody could be buying it on the regular market just on its own, and that's great. But if it had a 33.33% weight in the ETF or in the basket made up of those three stocks, and then everybody started shorting Warner Brothers and AT&T, or Comcast and AT&T, whichever ones you want to put in there, well, that basically will depreciate the price of AMC significantly. So keep in mind that that's sort of the process that's happening. And I'm sure that you understand that because you've been doing that DD. So just for everybody else who I encourage you to, go down, take a look at his feed, see how that resonates with you. Again, with every single DD, mine included. Take everything with a grain of salt and dig. And don't just dig for the, this supports my theory perspective. Dig for the, okay, what's the actual reality of what's happening here? Because that's so important. And I see people getting caught in confirmation bias a lot. It looks like a duck, but, it doesn't quack, it doesn't move, and it's just kind of floating in the water. Well, it's probably a duck decoy, right?
Right. Thank you for taking the time.
Hey, no, thank you for coming up and having the strength and the commitment to doing what you're doing and asking that question. But it's so important to get those because it helps us all learn. That's what this is all about. Thanks, my man.
Yeah, anytime.
Just to stem on that real quick, I think correlation doesn't always mean causation. And that's the beauty of this is when you dig into things further and further, you can prove the causation. It's essentially, I agree completely with what PB was saying. Whenever an ETF holds an underlying, it actually holds a percentage of that underlying in shares. So the ETF is correlated to the underlying price. But the causation, you would need a lot of shares in that ETF to essentially be manipulating the entire float of AMC. So it might be, something to look into many ETFs that hold AMC rather than just the one.
Yeah. Quick thought for everybody, and then Optimus, welcome to the party, and I'm glad you're here. Love seeing your face, love hearing your voice. But quick thought for everybody, because I know that there's a lot of people who would rather not jump up onto the top stage and actually speak directly. But if you guys still have some questions that you want to have answered within this chat, do me a favor and send me a message. My DMs are open. Right? So you can always reach me. What happens with those message requests is it comes in the form of a message request and it sends it to a separate inbox. So I don't have to be following you for you to be able to get that out. And I'll try to keep an eye on that. So yeah, if you're feeling uncomfortable coming up and speaking, but you still have a question that you want answered or want discussed, because that's the ultimate goal is just discussion, then please don't hesitate to send me a message. I am paying attention right now.
So just to hint at what was just brought up, so my initial looking at that, it's Now, we know that there's a lot of weird stuff going on, right? Some of it's harder to prove than others, but the amount of legal issues that would come from people giving us other companies' shares would be insane. And that's something that like the SEC could potentially act on immediately because that would be obvious to them. And with the ETFs, like we know that that's the case, right? Like we've been watching those go up and down, and they've been basketing the companies in the ETFs between AMC and GME the entire time. So if for somehow AMC would be correlated with, Comcast and Universal and all those, that would make sense because they're all technically entertainment companies. If we go down, they go down. They wouldn't go up. So that's just some of the stuff that I happen to have found. But since I've been one of the biggest people behind the whole boxcar theory, that's why I really wanted to come up.
Please, can I interject before you jump onto boxcar, just to second your point?
Of course.
Okay, perfect. You know I'm not going to keep talking unless you say yes. Right? It's respect, my brother. I ask, and if you say no, I'll let you continue on, man. It's no problem. I think, Optimist, your point was well needed to be said. And I want to thank you so much for saying that. One of the things that we have to understand about the stock market, and especially these big companies, is a lot of people get down the rabbit hole in tinfoil hat theory that the SEC is colluding, that they're ignoring, that, these companies are in some way, shape, or form getting away with murder. And in some ways, they could be. Because, if a murder happens in a back alley and the police aren't there to find it and there's no body, well, it makes it very tough to prove that a murder happened. However, the majority of these companies have absolutely insane regulatory watchdog requirements that they have to follow. They're not just being, shall I say, reviewed and looked at and due diligence done upon by us. There are also a lot of heavy backed Wall Street watchdog industry groups out there that have teams dedicated to looking for this. So I guarantee you, they're not going to do things that are overtly illegal, especially not the big guys, not the ones who they would lose billions and billions of dollars for effing up. So they tend to tread the line of what's legal versus what's illegal. And that's one of the things that I've been preaching for years, is the whole loophole mechanisms that are out there. These are legal loopholes that they've been taking advantage of. And I'm sure we'll get into it later on in the call. But as, for example, in the derivatives chain, in the derivatives market, in, the lack of margin requirements, we looked at it in terms of the rehypothecation of shares back in DTC 005. Those are all legal loopholes, which means they can get away with it because the SEC can't go to them and say, hey, I just think you're doing something wrong. They need to have put that in law, in practice, and then be able to prove it. So I wanted to address that because your point stood really, really well, Optimus. Thanks for letting me speak to that too. Now back to boxcars.
So the boxcar thing, like I said, I've been one of the biggest people behind that voice. And if I know you missed a lot of that yesterday with talking with Eric. As soon as I get that file, I'm going to send it to you. He wrote a lot of algorithms and stuff for Wall Street. So I specifically asked him about that to get a deeper understanding, like not just be reading something and thinking that I'm right. And what the boxcars, and he even brought up something called a freight train function, which is basically all the boxcars put together. That what happens with the boxcar is they're not truly pairing companies together like one for one, because that's illegal and easy to spot. But what they do is they put their algorithms in the same position, so they essentially manipulate the order flow of how quickly things are seen to help mimic an entire sector, which is why you'll see entertainment companies like AMC and GME run together, or you'll see crypto, like similar coins or tokens, run in similar fashions because it's easier to hide behind. But then Eric was explaining the freight train thing. He was like, if you had the ability to watch every stock ticker instantaneously you would see that that all the big boys, they have their, near instant type of data gathering. So they have a way of helping predict what's going to happen.
Mm-hmm.
So you'll see them put entire sectors or entire, like, let's say they would invest in certain ways in the entire 500 companies of the S&P to help make that function in a way that would make them profitable against another fund or another bank or whatever. So like the boxcar isn't physically joining the companies together. It's just a way to mathematically align the algorithms to help a profitable outcome happen.
That makes perfect sense to me. To those who it doesn't make sense to, that's understandable. Let me try and throw an interesting analogy along the lines of the sort of boxcar or the freight train mentality. Is, basically what they do is, by looking at the minutia of what's happening, imagine a freight train. You've got the engine, and in order for the thing to start running, you've got the engine's got to start heating. You've got to have that going into play, and as the engine's heating, it's producing steam. So you can look at the steam and how the steam is changing, and then their algorithms allow them to do this. Then they can look at, okay, is the wheel starting to kind of twitch as if it's about to start moving, but the brake is still on? Then you can listen with your ears, and you can say, okay, you know what, on this particular piece of equipment, that's the brake. Do I hear that squeak of it about to be pulled and released? And then by listening to all of those different factors on variety of different stock and understanding how that shift is about to happen, they get to jump ahead of everything and bump into that trade. They know before we do that that freight train is about to go whoo, off and running. Am I correct in that as far as an analogy goes?
Yeah, that's a much simpler way of trying to grasp that. It's them manipulating. Even it might not even be necessarily illegally manipulating.
I don't
right?
think that process would be.
Right. So it's just a way for them to legally help put the cards in their favor.
Yeah. And
because they have enough money to make those markets move.
That's right. And they have access to the data and information in microseconds. Whereas us, we do not. And that's one of the things that I think we need to push Congress for. We need to lobby. We need to push, the SEC to change the rules around it so that, look, for fairness and equality, we need to have access to the same level of technology to the same speed. Now, the problem is that does cost money. So, it's a bit of a catch-22. There's always the capitalist argument to be made that, well, you have access to it, you just don't have the, $1 million a year to spend on it kind of thing.
Right.
Okay. So that was great. Optimus, thank you so much for going through that. That's really awesome. And I hope that you guys get an opportunity to explore a little bit more around it. Develop your thoughts, play your thoughts out, be critical of the ideas that come out of these things. Look at it from, where's the legalities around that? Where's the challenges? Fafa, before I give you a chance to speak, I want to actually get to at least one question. I want to intersperse these that are flowing through my inbox. If that's okay, unless your comment is on, pursuant to my rule, one topic at a time, on the boxcar effect.
Well, it is. First off, I want to thank Tom for coming in and speaking. I know he's having a difficult time, but I think the perfect example that Tom's bringing up is about how we can see things like Bitcoin Cash, Ethereum, and Dodge all kind of going up and down roughly at the same time. And that's the kind of example that I think Tom is bringing out about this whole boxcar thing is they've got them all kind of synced together on the momentum going up and down. So that, to me, is what I see often when he's talking about the boxcar. So,
for sure. And I think, that's the whole power of the market. If you can train your mind to look at all the little finite, tiny data points, then you're going to be strong. You're going to be strong in your decision making. That's where you're going to make money.
100% agree. I do want to stem into that just for another thought. Essentially, anytime you make a trade, it's a thesis, a trading thesis. So there's definitely a trading thesis out there to short all of the in quotation mark meme stocks, right? However you want to define GameStop, AMC, BlackBerry, that whole kind of family. That's 100%. There's a trading thesis to short those, and that alone will create a lot of selling power. But again, that all stems into if apes hold, right, they have to buy those shares back. But 100%, that's for the whole boxcar thing. That was very well put by both of you. That's definitely something that I'm going to start looking into.
Sweet.
Thank you, guys. Thanks for bringing me up, Pete.
Oh,
Peanut
dude.
butter jelly time.
No
I
worries.
gotta go shave and shower. Gotta go shave and shower.
Do it, man. Do it and enjoy the rest of your Sunday, brother.
Thank you. I'm going to a national peach festival.
Ah, that sounds good. Sounds tasty.
Sounds
Better be.
amazing.
We could do some very, very interesting double entendres with that. That's for sure. Can I get a ticket, please?
It's free.
Sweet. I'll come right down. Millions of peaches. Peaches for me. I'm aging myself there with that song, I'm sure. So we had a question come in from Qinglong Xiao. I know I'm butchering it. I apologize. But yeah, you were asking about discussing exit strategies. I'm not going to discuss that here, and I'm going to encourage, but I did want to address the fact that you did ask the question. I appreciate that. But in terms of exit strategies around, or, what's going to trigger the MOAS, I don't want to discuss it too much aside to say that I do believe that there's a lot of little elements that need to come into play to catalyze a MOAS. There's no one single event that's going to make it happen because these guys are smart. The people at the top, you get put into that position because you strategically think about all the different elements around it. So if you see a spot where, it could potentially get you in jeopardy, you've already hedged it. You've hedged yourself against that 10 steps down the line, 10 steps before. So yeah, just keep holding is my advice. Know your conviction and know that, look, we've just spent the last couple of weeks with the stock not going below 28. That's a pretty strong position moving forward. And the fact that more and more institutions are buying up and starting to get on the bandwagon on the upside, that's a huge thing. Another quick question was, sorry, 1 second. Yeah, J Scroll, I'm going to have to reread your question. But go ahead, JP, if you had something to say.
Oh, I was just going to stem into the institutional buying. A lot of people, there is a double-edged sword to that, right? Like they're definitely going to be loaning out shares, but here's the reality. You don't make that much money loaning out shares, especially if the underlying is tanking on you. So to stem into what PB was saying, the past, 3 weeks, we've been holding this 30 level support pretty solidly. So it makes a lot of sense for, institutions who want to capture potential upside while also being able to loan out shares to do something like to take a heavy position into AMC. Now, if they thought it was going to tank, it wouldn't make sense for them to do that, right? Because the amount they're making on loaning it would actually be less than what they're making by the stock tanking.
For sure. JSKRO24. You had a question. It's in there. Maybe it's my diverse mind right now because I'm trying to pay attention to, the Twitter space and everything else. But I'm having a hard time kind of processing the question in a way that I can articulate it to everyone. If you would like, I would love for you to come up and ask that question. Perfect. Thank you. And then we'll have next Crick. Oh, Crick dropped out. That's fine. Go ahead, J Scroll.
Sure. It wasn't a question. It was just kind of a follow-up to the first person's question regarding the Fidelity ownership numbers. So, and maybe somebody can correct me if I'm wrong, but the way I read those...
Oh, sorry about that. That was my bad. Go ahead and unmute yourself, J Scroll. I'm new to the Twitter spaces. I'm sorry.
That's okay. No, what I was saying, my question really wasn't a question. It was just a follow-up to the first question. I think Fafa asked about the Fidelity numbers on the ownership. So, I mean, somebody correct me if I'm wrong, but the way I always read these numbers is that, you have institutional and insider ownership of AMC, which, I believe the outstanding shares are like something like 513 million now. So if you look at it, the institutional and insider ownership, that is about 32% right now. So if you take that 32%, retail has the rest of the pie for us. I mean, it doesn't really tell us that 67.2% number doesn't tell us how many shares we own. It just tells us how many shares we have available to trade. So that's where I was going with that. I don't think that number tells us anything about, if we bought or sold. If BlackRock went tomorrow and bought 50 million more shares, that would increase institutional ownership, and you would see our piece of the pie go down.
Correct.
So
Yeah.
that's all I was saying. I don't think that gives us really anything into, what retail is buying, or selling their shares or anything like that. It's just, our piece of the pie.
Absolutely. And then if you factor in as well the idea behind, and market makers have the opportunity to do this, they have the ability to do this. But we do talk about synthetics. It's a difficult conversation to have because synthetics are very difficult to prove. One thing that I'll tell you about the stock market and how it works is if any of you are accountants in there, down in the audience, go ahead and give me 100%. Let me know because you'll understand this greatly, but I'll do my best to explain it to everybody. On an accounting ledger, you're going to have a debit column and a credit column. On the credit column, that is where your negatives go in. That's where money comes out. And it sits as a number. And before that number, there is a negative, the dash. And it sits as a number. So anytime that a market maker, for example, has to go into a negative position on a stock to allow the market to keep moving, right? And this is just its liquidity rules. They can't allow a stock to stagnate. That's their whole position. So if they're putting themselves in a synthetic position or another company is putting themselves in a synthetic position, it has to show somewhere. And the problem is it shows up as a negative, and then they net balance it out against their other long positions or other positions. But there are definitely, and it's hard to figure out what's a synthetic versus what's not, but I think there are synthetics out there. Now, whether those are created based on market making activities or not, it's a legal process. If they're not legitimate market-making activities, it's technically illegal. But anyway, I'm going down a rabbit hole. The point that I was trying to make is if you subscribe to the idea that there are synthetics out there, this also impacts because if we've been buying and buying and buying and buying, and let's call it no apes have ever sold, and that 67% is all apes and retail investors, it still could account for the fact that there are synthetics out there on the market. And when those synthetics are on the market, that is going to greatly shift that 67% figure. Because maybe it's 67% of the billion instead of 513. Now, I'm not big on having the tinfoil hat theories on that, especially with things that I can't prove as fact. But, that's my thoughts on it. What's next?
So I had a question in my chat. Someone sent me a picture of a counter AMC argument, and they asked me what I thought, and I think this is something I'd like people to take away is you should embrace all opinions, even if they're counterintuitive to what you believe. You should take them into consideration, and if your conviction doesn't change, that just makes your argument even stronger. There's no reason to shut something down immediately. Because in fact, if you can understand what the other side is thinking, you can actually make your argument even stronger, or hey, it might change your argument a little bit, and that's okay. That's kind of how you learn to grow. You accept all the information and you take it, with a grain of salt, and you do your own research, and then but you don't just shut it down. You should embrace it and then see how it weighs into your convictions.
Yeah, I'll second that 100%. It's the definition of confirmation bias is believing something simply because it subscribes to your point of view. And unfortunately, so guys, I'm old. I've been around the block, and I'm past millennial, but I see this happening more and more and more in the millennial generation and in the age of information. is it is happening, and we have a tendency to get into that confirmation bias. You've got to resist it. JP's point is 100% clear. Look at it. Don't subscribe to it immediately, whether it's good or bad, and start digging and learning yourself so that you can understand how you're going to, create your argument against it. There's another value that brings is I'm connected with, call it 25,000 people. JP's connected with 10,000. Jay Scrow may be connected with, 182. But you know what, guys? Go give him a follow because he's a smart guy. He seems to be. And let's get that up to like 250 or 300 or so. But there's lots of people, and you're all connected to different people who may have seen that same particular element of FUD or that same argument against AMC that you can now help if you start to learn it and you develop that confidence and understand where it's wrong. That gives you the opportunity and the power to help thousands, if not tens of thousands of people as you spread that out. That's my thought on that. Let's just see. Yeah, Mantiseer was asking a question. And yes, absolutely, questions are allowed. Please send me DMs if you guys have questions. It'll come in. Let's see. So I went to change my order away from PFOF to direct it to the lit market, but my broker wants me to sign a waiver that's intimidating to me. Am I just being paranoid? So I don't have an opportunity to actually look at that waiver. But generally what happens in that, and Boof, I'll bring you up in a quick second. Generally what happens in that case is they have standard waivers that you have to sign, to be able to limit you. Most of the brokers that are doing PFOF, to my understanding, essentially will do that PFOF or do the share lending program. That's another area that comes up a lot with this when you're in a margin account. And so the only way that they can turn their lending, because it's actually part of their built-in network infrastructure or their system architecture, the only way to change that is by putting you into a cash account. So you need to sign different waivers for that. But I promise you when I get a chance, I'll take a look at that waiver and see if there's anything untoward or extraordinary in that waiver's regards. But I highlight it. You were referencing Charles Schwab. While they're, in my opinion, the most ethical company to be working with because they do PFOF, they still have to abide by the law, and their lawyers are pretty clear on not producing waivers that are in any way, shape illegal or damaging to people. Would be my opinion. I hope that gives you confidence, but I'll take a look at those waivers for you. Boof, welcome to the club. How's it going, buddy?
Good. How you guys doing?
Fantabulous.
I just wanted to see if maybe you guys can talk a little bit about these FTDs from last week and looks like this week that are a little heavier that they have to cover. I was just kind of curious. I found it interesting last week when Chanos came out and announced that he took that short position. Just curious to see if you guys think that maybe at all, if that maybe partly had to do with helping maybe cover these FTDs and stuff like that. But I just want to get your take on that.
Does anybody have an answer to that? Because I don't. I try not to speak unless I've read the underlying information, or at least understand the sort of direction and all the context around it. But if anybody has some comments to make on that, please raise your hand. I'll bring you up. I want everybody to participate in this.
I'm in the same boat as you, PV. I don't like to speak on something until I've, again, I take everything, even good news, with a grain of salt. And that's just because, there's definitely a confirmation bias for groupthink. But I looked at it from Wolf of My Street, Ryan's post, and he seems to be doing a lot of research on it. So I'm just holding off to see what he has on it, just because then I can kind of get a concise view and start to do my own research.
Sweet. Well, listen, we've got, I don't know if somebody can help me find out how many people we have in this space, but it looks like, somewhere around 100 or so, maybe a bit less. I think this has been a success today so far. and I'm going to keep this going for another hour and a bit myself before I've got to get on with other things in my day. But if you leave that with me, Boof, send me a DM or a message on it, then we can bring it up next week as well.
Awesome. Appreciate it, man. Thank you.
It gives me some time during the week to kind of process it and understand a little bit about it, or maybe find an expert who is able to speak on it, like Wolf of My Street. All right.
Sounds good. Thanks, man.
Sweet. I want to give a big shout out to everybody that's in the audience who's sending me DM messages, asking questions, participating, joining in this. Thank you guys so much. And even if you guys are just listening to give yourself some wrinkles in your brains, you know, you guys are all pros. You guys are all fantastic, because that's what we're here for. Let's see. Another question. Hey, PB, I'm kind of new to the stock market, taking things seriously since June because of AMC, learning a load. I have two questions. I'm hearing a lot of people talk about six-figure price targets. Is that hype, or can that actually become a reality given the information that we have now? The second question is probably going to be for JP to answer, and that is, where would you recommend for newbies to learn options trading? I do not trade options. I do not understand enough about it. I kind of stay in my lane. So I'm more focused on the regulatory environment. I understand the rules, the legal procedures. I do a lot of the reading around that, and sort of the market structure and the plumbing underneath. That's kind of the area that I feel most comfortable in. But in terms of the six-figure price targets, you know, moon of 500,000, moon of 100,000, you know, I respect the drive for it, but it's difficult to say because it's never been seen before to that level. So it's very hard for us to put a committed, or at least for me, to want to put a committed response and say that that is where it's going to go. There would have to be a lot of little elements that went extremely right for us to be able to make it to that point. Is what I would say. And one of the things that would have to happen is all apes. I don't mean some, I mean all apes would likely have to hold. So I'm going to be honest with you. I don't believe, hate me for it if you want, but, you know, because I haven't seen it happen, I can't honestly tell you, yeah, 100%. And I don't overhype things. I think that to get to 500,000 might be a bit of a stretch. To get to 100,000 might be a bit of a stretch, because there's so many things that would have to go right, including there would have to be some level of automated computerized margin call in the process. Now, interesting of note is that the DTCC is actually pushing right now for market participants that are members of the DTCC and their subsidiaries, which is the FICC, the NSCC, and the DTC, to actually participate in their margin transit utility. And their margin transit utility is actually an automated margin calling process. But you got to remember that a margin call is not a, hey, you need to close every single one of your positions. It is, no, you need to maintain a certain balance within your account, a certain margin level, somewhere between 25 and 50%, depending on the contracts and how they're set up. Could be even lower. And you need to maintain that as capital or collateral within your account in order to continue trading in a high risk environment. So that's my thoughts on that. Is, you know, it's nice to think that we have a six-figure price target, but a lot of things would have to go right, to be perfectly honest and fair on that. That's just my opinion. The second question was regards to learning options trading for newbies. JP, maybe you can speak to that a little bit, because that's not my wheelhouse.
Sure. So I learned the hard way, which was with my own money, which, you know, I lost a lot of money for a long time, and I'm kind of so stubborn. I just stuck with it until I figured it out. So I would never, ever recommend that to anyone ever. I'm actually creating a Discord right now, which will have the ability to send out alerts of, you know, paper trades that you're taking, and it'll kind of track your success rate. Plus, we're going to be posting down all of the information for free always, and my trades will always be free. And that way we can kind of create a hub where people can kind of learn together with a gamified learning experience where, you're not using your real money, but you're getting, leveled up or, leveled down based on the trade idea that you make. And my idea for doing that was I want to give the logic behind all of my trades, not the alerts. So once I start putting out all of the logic, you can start applying it to your own trades. All the other traders that I hired in there will be doing the same thing. And if you never pay a cent, you'll be able to learn every single thing that we put out. That's the number one thing that I'm aiming for, is to teach everyone the logic behind it. And then there's a bunch of other wonderful resources to learn how to trade options. I will post out a link of all of the best free resources that I've ever seen. Because again, you can definitely learn how to do it. It's just a risky business, and it's not smart to use real money while you're learning.
This is the way. JP, I got to say, I have mad respect for you that you didn't hold on to that opportunity to speak just to promote what you're doing, or specifically what you're attempting to do in your Discord server, but you also have the value to everybody to give them other areas. People have to be able to make that choice. So I got mad respect for you for doing that. For those of you who are in the audience right now who are competent options traders and want to be able to also share your knowledge and information with people, if you tag me in a tweet, I'll go ahead and, throughout the day today or tomorrow or whatnot, I'll go through them and I'll certainly share that out. Everybody can look and can follow and can, the more resources that we get in this, the better. But I would ask you to do one thing when you send me that tweet. Make sure that you are very specific. You need to include this in the tweet, or I'm not going to retweet it out. Options trading is not easy. It is high risk. Please do not think that you can do it without a lot of support behind you. Okay. I just want to make something like that out there so that you get the point across that not everybody should be trading options. It's easy to lose a lot of money with it. So please, if you do that and you follow that sort of principle, then I have no problem with retweeting it out to my audience. Anybody else in the audience that wants to come up and have a little bit of a chin waggle, a chit chat, or has a question to ask? If not, I'll be happy to go back to the DMs. Even if you want to just come up and say hi to everybody. I don't know. That's just what I do when I jump into a space call. I like to say hi to everybody. But then I'm a butterfly. Okay, so moving forward then, Steeler Holden was asking what's happening on the 26th with the MSIC, and then September 1st with the DTC or NSCC. Will these form a catalyst to reduce synthetics or put pressure on Citadel to trade more legitimately? I want to speak to the September 1st one first of all, because the MSIC I have to do a little bit more digging into to make sure I'm remembering the correct information. And then anybody else who wants to. In fact, if I can, JP, I'm going to give you co-host invitation, if you don't mind keeping an eye on the audience and pulling things up, because I'll be bouncing back and forth between these questions and research. I trust you, bro, if you don't mind. But yeah, in the September 1st, I haven't heard anything about September 1st from the DTCC or the NSCC. I think there's been a lot of confusion about that with that date. I know that August 23rd, which is coming up fairly quickly, is going to be one of the dates for the DTCC 010, I believe is what it is. And that's something a little bit different. I'll just pull that up. But the September 1st date is actually very interesting because I did just put out a huge body of research on that. And that is on my Reddit, which is u/PBJellyGames, that you can find that. And that is in regards to the uncleared margin requirements, the UMR rules. And what's interesting is those are not DTC rules. Those are not SEC rules or FINRA rules. Those are global rules. It is a policy or a a regulatory framework that was put out by the G20 countries. And that was done a number of years ago. And right now, in September 1st, we're actually looking at phase 5 going into effect. It was supposed to go into effect last year, but it is actually only going into effect this year because of COVID, et cetera, et cetera. And that one is really, really interesting because what it does is it actually requires that hedge funds or institutional funds, if they're in derivatives positions, and if they have an aggregate amount of, I believe it's 50 billion on the European side and 8 billion, I believe, on the United States side. So if you have a sort of net position of derivatives within your fund that reaches 8 billion. Now that can be derivatives in AMC, in different ETFs, in like all across the board portfolio of stocks. If you reach that amount, then you're subject to these new rules. And these new rules state that no longer are you able to unmargin do over-the-counter trades. So swaps and derivatives and options. No longer can you do that sort of freely between buddy to buddy. Now you actually have to put margin in that is regulated by law. And what that means is if I'm going to trade in a derivative, whether it's the buy side or the sell side, those two parties, the buy side and the sell side, have to come together. They need to both separately calculate and record the margin requirements as prescribed by the law. And they need to take that collateral. Both of them have to add collateral into a separate account that is managed by a third-party custodian. So what was happening before is what I like to call the Wild West. It was the Wild West of derivatives trading. And essentially what it is, hey, buddy, listen, I want to do a trade with you, JP, or Dr. Trillions is down there. I want to do a trade with you in derivatives. And this trade's going to meet $50 million. Do you need me to put any margin in? And Dr. T says, nah, don't worry about it. Let's just do the trade. Don't worry. We're good. We can clear this up later. And then we go about our merry way. So now I've got $50 million worth of a bet that's in place. And if I default, well, Dr. T is out $50 million. So what the margin process allows is it allows the regulated authority by SEC, by FINRA, and by the regulators to essentially say, no, hang on. If you're going to participate in that kind of a risk, because it can cascade across the market, you both need to put up 10%, or you both need to put up 20%. And so before, let's say that Dr. T said, hey, no, I want 10% collateral on that, right? We got to have that agreement. Okay, no problem, Dr. T. I'll get the 10%. Here's the collateral. It's in the form of a government bond, a treasury, et cetera, and I'm going to keep it in my own bank account. And Dr. T's like, okay, no problem. Then I default again, and Dr. T's out $50 million. And I just run away with that extra collateral. So now the rules are actually no. You both have to put collateral in if you want to participate in this high-risk bet, and you cannot control that collateral. That collateral has to go to a third party to manage. And that third party has accountability themselves. So what's really interesting about this is when you have three parties that are accountable to the Federal Reserve or the Federal Treasury or the SEC or FINRA, if one makes a mistake, they're all accountable for that mistake. So it creates a very, very rigid structure. Now, where this ties into September 1st and some of the things that we see happening, if you go back into my original DD on it, you'll get a very good read, and I go through it, in quite detail. But what this does is, I just lost my train of thought there for a second. But I do believe, so it's sort of the hypothesis that I have is right now the market is over-leveraged. It's beyond belief over-leveraged. I mean, to the tune of trillions of dollars that are in these high-risk derivatives plays. And here's the problem. If a few hedge funds kind of crash and collapse as a result of this, then it cascades across the market. And, that means they've got to close up their short positions. They've got to sell off long positions to be able to cover the losses, et cetera, et cetera. So a lot of bad things can happen. With this, it provides a bit of a protection and a buffer zone for the environment. But here's my interesting take on this. Number one, I think the lessons of 2008 are being learned. And I think the global regulatory bodies are looking at that. However, I do have a belief that there is going to be a lot of companies, and I wouldn't say a lot, but there's going to be a few companies out there, few hedge funds that will not be as well prepared for these new margin requirements to come into place on September 1st. And so as they continue trading in the derivatives, they're going to get margin calls directly from the federal government saying, you need to now put in this X billion dollars of basically cash capital, which means less money that you can use for trading. It means less money that you can use for paying the interest on short positions. It means less money that you can use to buy other stocks to hedge your risk. So if you're really, really heavily short on stocks like AMC or GME, and then we start to spike and skyrocket, well, you could get caught up in a big time margin sweep. And if that happens and a couple of funds start to go bust because of that, or start to have to drop out of their short positions, those very high risk plays, in order to account and bring themselves back under the margin level that is required and mandated, well, that only helps our stock. So again, we don't know because we don't know how many companies are going to be caught up with it. We don't know how many companies or which companies are shorting. But I have a belief, it's just a feeling that over the next 6 months, we're going to see a bunch of little hedge funds start to crash and crumble because they don't have the ability to get more leverage. It's like if you're maxed out on your credit card, right? And then the interest rates go up. You're kind of screwed, guys. And I do believe that there's a lot of Wild West traders out there that are going to get caught up in that mix. Anyway, sorry, that was long-winded. Very, very long-winded. But I hope it was enlightening for some people.
Yeah, thank you for doing a synopsis on that. And I think you might have answered the question that I'm getting ready to ask.
Go for it.
The question was going to be, would that be retroactive to these brokers and to the dealers? The enforcement's not going to be retroactive?
No. So the margin requirements wouldn't be retroactive on previous contracts because you can't do that. Just the regulatory work to do that. And again, the SEC and FINRA and, the global regulators, they don't want to overburden people just to tamp down on the risk. And it's generally a frowned upon practice in law to go back and change the deal. So it would be, to my understanding, from any future derivatives plays that have happened or that are happening, it's going to be moving forward. So that's why I use the time frame of between 3 and 6 months or so that we're going to start to see a lot of these changes happen. But remember, a derivatives play, you don't play derivatives necessarily over the course of a 3-year period of time, right? So I don't think we're going to see a lot of contracts that fall outside of this that, will carry on through more than 6 months to 9 months. That's my thoughts. And again, I can't guarantee that, but I haven't seen anything in the clause that says it's retroactive.
All right. Thank you for the application.
No worries, man. Great question. Thank you for the question. Mr. Chris, welcome to the party. How are you, my friend? Not a problem. Let me address another question. JP, J Scrobe, anybody else up on stage? Has anybody else got a question or anything from your audience that you guys wanted to share? And Mr. C, if you came up to be a speaker and you have a question, just go ahead and speak now.
Hey, no, I didn't have a question. I don't even know why I came up as a speaker, quite frankly. But yeah, thanks for the info. It's really good info, and I really appreciate it. And love the vibe, love the demeanor. So keep it going.
Thank you, my brother. I was going to say, probably the reason why you were brought up is that that chain around your neck is really, really cool, and it goes really well with what looks like to be a turtleneck. So that's a rockin' style, brother. I love that style. Just give you props on that. That's fly. And I just aged myself.
Like PB said earlier, hey, if you guys just want to come up and say hi, I think it's a really good for everyone. Instill some confidence in maybe someone who isn't so confident to come up and say hi. And the truth of the matter is, the more people that come up to talk, the better this is. It's all about hearing everyone's thoughts, everyone's opinions, and making your own conclusion on them.
Couldn't have said it better myself. Guess what? Within the next 5 minutes, I'm going to scroll through and I'm just going to pick somebody in the audience and I'm going to say, hey, you, finger pointed, get your butt up here now. No, I'm joking. I'm not going to do that. I won't put somebody on the spot like that. I see Isaac has come up and is trying to connect, so we'll look at that there. Let me go to really quick another question that's in DM. William, your question on let's say the price goes to 5K, can that realistically be paid? That is, it's an interesting element of the discussion around what's the floor or what's the highest level that we could moon to. But I like that question and I like the way it's phrased. I've given lots of thought to that. So to give you guys a little bit of an understanding of how the underlying market works or an underlying trade works, let's hypothetically say that we went to 100,000. Okay. So here's what happens. We go to 100,000 and we then say, I want to sell at 100,000. We put in our trade. We say, I want to sell 100 shares at $100,000 per share. And then we wait. Now, typically in the current environment, we're waiting for a millisecond or 2 milliseconds for that order to be filled. All right, if we're trading at 50, 60, 100, 200, 300. However, it will wait there and it will sit there and it will wait and wait and wait until somebody on the other side says, okay, I'm going to put a sell order in, or sorry, a buy order in for 100,000 because that's where I see the price is. So unless you have a counterparty to buy it, it will not trade. Now, that counterparty also, when they push the buy button, makes an obligation, a legal obligation to buy that from you. And if you're talking about a broker-dealer at that level, or a hedge fund, or a big broker who has to buy it because they're in a margin call situation, well, then they've made the commitment, they've made the agreement to buy your share at $100 or $100,000, or your 100 shares at $100,000, and that is their commitment. They got to live by it. So it's as simple as that. The second they say, yes, I will buy it at that price, then it immediately goes through the channels, especially if you're doing it via non-PFOF methods. Then you're pushing it through. And as soon as you've got a buy party and a sell party that agree to a price, that price is locked in and they have to pay it. So that money will automatically come out of their account. And if it doesn't come out of their account, then it will be backed up and it will come out of their NSCC default funding. Because if they refuse to pay you after they said, yes, I'll take that order, then it becomes a default. And under a default scenario, the NSCC or whoever their clearing center is actually has the ability in the case of that default to say, okay, well, you made commitments, you owe X million dollars, you have put in supplemental liquidity deposits and margin requirements into our accounts to protect all of our members. And now we're on the hook for that. So guess what? We are going to take all of the stocks that you've been trading with us, the ones that you hold long, whatever the case is, and we're going to sell them on your behalf. And so that's kind of how the process works. However, just keep this in mind. If it gets to 100,000 and nobody is buying, well, then your order's not going to be fulfilled and there was no contractual obligation to pay you that money. But the second that trade goes through, there is an obligation to pay you that money, right? So it essentially gets paid. And it's backed up by the NSCC and it's backed up by a variety of different insurances, et cetera, et cetera. And, if it's a big enough fund and, they're crashing and the fear of them crashing and burning or the fear of them going bankrupt is, deeply, deeply threatening to the market or to the economy as a whole, I should say, the Fed can step in and do some type of a bailout process. But I would look at that as being like the very rare outside scenario, although we did see something similar in 2008 with a couple of companies. Make sense? All right, Weka. Wecken be better. Oh, I love it. We can be better. Dude, I love your name.
Hey, thanks. Hey, thanks for all of you guys up here hosting this space. It means a lot to me. I work alone and most times, and so just having other human voices in my ear is regulating to my psyche. But I have a question that I've always, and I'll preface this. I started buying AMC at 7 something, or back with what I had. I just started investing, and I wish it was what I hold now. I wish I would have bought at that price, but at some point this will all be relative. I hope, I believe. So I'm here for change. I'm here for personal change. I'm here for the bigger picture change. And something I've always wondered about, but I've been fearful to ask because I don't want it to, but what's commonly referred to as FUD, and so with AMC, let's say hypothetically, this goes to where we all believe it will, whatever that is for us as individuals, and we sell. Let's say there's a mass sell-off and the price goes from, let's say, $100,000 to, will drop. At the end of the day, what happens, or what hypothetically would happen to AMC in that event? Can you guys hear me?
Yep.
Yeah, okay.
Yep, you're good.
What would happen to AMC? Would essentially the hedge funds be major bag holders and they would own AMC and have the float and nobody else would be able to afford it?
No, because when that type of sell-off happens, right, what it would do is it would bring the price down. So when we get into a MOAS situation, we may end up looking at the price jumping from $1,000 to $1,100, and then it gets halted. And then when the halt unfreezes, then it goes to 1,250. And then it just keeps going up and up and up by that. So there's always a market halt when you have a 10% rise in the stock within a 1-minute candle. So we could see something like that. But in the opposite effect, if there's a lot of sell activity happening, let's say that we see, as apes, we see a high end, and then we start to sell, well, that's going to bring the price back down. And so the only way that it's essentially what the shorts are looking for is for the price to go as low as it possibly can for them to cover. As simple as that. Now, if the shorts were all covering, and let's say that the synthetics are all out there and there's actually 2 billion shares, and those shorts have to end up covering that, well, then, yeah, they're going to own they're going to own the company. As simple as that. But then they're also going to want to start making their money back. Well, actually, hold on. I may be crossing my wires here. So let me backtrack for a quick second, because the shorts wouldn't necessarily own the company. I apologize. I don't know what I was thinking. The shorts are shorting it. They are borrowing that stock from somebody. So whoever was lending that stock out would actually still own that stock. Now, if we all sold and we're the ones who owned that stock and we're lending it out, if you're doing business with certain companies, I'm not going to, name names or bash anything. But if we're part of that lending program and we start selling those, well, they don't have access to those shares to lend. They'll have to wait until the buyer decides to lend to them again. But any type of downward pressure, any type of selling is just going to bring the stock down, 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 down. So if we as apes collectively get to $100,000 and we all at that moment, all 4.1 million of us, as the coin's term is, and I'm going to just continue to use that, take it with a grain of salt, doesn't necessarily mean that they're all apes. If we all sold immediately all of our shares, well, chances are the price would drop very significantly, very quickly, and it may come back down to, $10 or $5. At that point in time, let's even hypothetically say it goes to as low as $1. At that point in time, two things would happen. Number one, or two things would happen and one thing wouldn't. Number one, we would all basically likely buy it back at that price, because we believe in the company and we'd get a heck of a lot of shares. So I personally think that's what's keeping the price as high as it is, even though there's all that selling pressure from the hedge funds and pressure from the hedge funds. Number two is, the hedge funds would just have to borrow and borrow and borrow and borrow more to be able to bring the price down. But the price the profit from $5 to $1 is a heck of a lot less than $70 to $30. So the chances of a lot of hedge funds really wanting to get in on that profit action, fairly slim. The third thing that wouldn't happen is AMC would go bankrupt. That would not happen. Right now, our company is in an increasingly strong position. An absolutely fundamental, like when you look at fundamental improvements from companies, you're looking at ranges of, and I'm being hypothetical here, I'm not using actual numbers, but let's call it, a 10% growth rate is extremely good for a company, for a large company, especially one that's been around 100 years. AMC was on the brink of bankruptcy. They now have a war chest of almost $2 billion in cash, in capital, in liquid capital that they can use to do a lot of things with. Yes, they're in debt, but you know what? Every company worth their salt is pretty much in debt. It's just realistic. Leverage makes money, period. If you've ever bought a house or a car and put it on payments, that makes you money. So it's commonplace to see that. But AMC in the last 6 months raised $2.5 billion worth of equity, or worth of capital, cash capital, right? So that's a huge thing. That gives them a lot of cash flow room to play out over the next year and a half. It also gives them a lot of money to make fundamental improvements, to make the kind of deals, the rights deals like they're making with the UFC and variety of sports competitions, et cetera, to fundamentally improve what type of entertainment experiences they provide. So that's huge in value. And then if we take a look at Q1 versus Q2 numbers, I know that Gasparino, let's call him Gasbaggerino. I coined that. You heard it here first, folks. And a whole bunch of others are down in the stock because we're still in a negative. But you know what? We were in a hugely negative. I forget what the exact number was, but I believe it was over $2 or $3 negative in EPS, which is earnings per share, in Q1. And now we're only at 71 cents in the negative earnings per share. That is a multiple of 2.5. That's 250% improvement. So to anyone out there who thinks that AMC is going to go bankrupt, send them my way, because I'm going to have a very good laugh at them. That's all I'm saying.
Yeah, and I know nothing.
No, it was a good question, bro.
But, and I feel convicted and completely agree with everything you said about the fundamentals of AMC. When people say this is not a fundamental play, I mean, at this price, I believe I would hold this long term for 5 years, knowing that I'm going to 3-4 times my money. So I do believe that this is a good trade regardless, depending on when you buy in. My biggest fear is I really do love AMC. And, I've been really kind of, deep diving into the motives and what I've been seeing in the world for a long time, and I didn't have the code. And now that follow the money phrase, I mean, we've all heard it our entire lives, maybe, but until you really do that, you miss so many pieces. And I just wonder, I don't even wonder, I know that there's a bigger agenda here with AMC. I don't think it was exploiting a movie company because of COVID. I believe that AMC holds a lot of valuable real estate around the world. And BlackRock, Vanguard, which are seemingly the same company at this point, Citadel, all these hedge funds, they want this real estate. BlackRock, Citadel, all of them, they own giant construction companies. I'm a construction small guy. It's just me and my son. But, this is old mob stuff, when I think about how how the unions ran, the construction trade. It's, if you really think about the money and why AMC is one of the last retail-owned companies. Are there any others that we know of?
Yeah, you're not wrong. I'll tell you this. I mean, people know my background. I've been leading businesses for years, and when it comes to negotiation strategy, that's one thing that we'll go into a negotiation, and I want something, and we'll defer, and we'll make people think that I'm wanting something different. That's the element, and I'm telling you, yeah, I think you're onto something in your thought process. That the amount of owned real estate. Now, mind you, a lot of that real estate is leased. It's not owned, right? So keep that in mind. But they do own quite a bit. But that owned real estate is hugely valuable. So if people can push a company into bankruptcy and get them shut down and then go in and say, hey, AMC, you're in trouble, financial trouble. Well, where do they have to turn to? They have to turn to the big guys with the money, with the cash in their pockets. And I've done that. I mean, not personally, but my company, not my current company, but companies I've worked for. And it's, you make those efforts to look for distressed organizations, and then you buy them at 50 cents on the dollar. You buy them at 25 cents on the dollar. It's a common business practice out there. Luckily, the ape stood up and said, nope, not going to happen. And I think at this point in time, it's just not going to happen. They just don't have the ability. But you're right. Follow the money is it is the best way. Where are they going to profit from it? How can they profit from it? If you can figure that out, then you're basically doing the same job as a very good investigator with the FBI.
So I appreciate everything you said, and I, like I said, I don't want to create any uncertainty here. I just really want to make sure. I just want to make sure that we're loving our company in spirit and what this really means for the world. I don't think we're going to get many more chances at equalizing things. I think we have an opportunity here that none of us really realize. And I've seen so much social health. I've seen men display, an emotional IQ that I didn't really think existed outside a mini circle that I'm part of. The toxic masculinity that our kids are learning from. I see people. I'm starting to really wonder if are we all just here by chance? And I'm a spiritual person, but I don't hail a certain religion or whatever. But I just feel like there's so many.
I get you.
Like minds, and I just feel a resonance with so many people here, and man, sometimes I think that humans made it through and are coming back with time machines sometimes, to try to fix previous mistakes. And
well, I think
man, is that why we hold it?
We're all pretty fed up. A lot of us, I think it's the mentality that brings people to the ape cause and that keeps us here is, originally we're fed up with being stepped on. We're fed up with the greed, the growth of greed at everybody's expense, at our environment's expense, at, the expense of anything. And I think we're all pretty fed up with it. Anyway, listen, we can. I love your thoughts. I love your comments. I want to let you keep speaking and keep promoting that positivity. But I want to keep it to the focus of the DD, just because that's the name of the call. And I want to give a couple of other people a chance to ask some questions, get a chance to speak as well. But I'm with you, man. I'm there 100%. Thank you so much for sharing your voice on that.
I love you all.
You just got to follow, buddy.
Couldn't agree more, man. It's a beautiful thing to see, a group of people come together that are from such different backgrounds and to just kind of spread love and positivity.
Absolutely. Does anybody else have questions? I just brought a whole bunch of people up onto the stage.
Hey there.
So go ahead and fire
it. You all right? Can you hear me?
I'm good. Seeing Potency. How are you?
Yeah, I'm good. Been a while. I talked to you on Discord a few weeks back.
Yep.
Yeah, I just wanted to throw in while you guys were talking about possible, like, some kind of conspiracy or blah, blah, blah. That Rich Greenfield 1 cent prediction. Turns out he's got a seed money in a cinema type company called Kinema, 1.2 million. So I would probably say he's got his own personal motivations for why he's put that 1 cent prediction out there.
For sure.
Just wanted to throw that out to everybody. I don't really have much else to say, but I just thought I'd add that to the conversation.
Yeah, great ad. I think, again, it goes right to the point that we were talking about, is follow the money, right? Yeah. Everyone's got their own agendas in these, big organizations, and you're going to see it. Now, I think that's what makes the apes different, is we don't all have an agenda, that's about greed and about making money. I like to think that when you're poor enough for long enough, that you start to see humanity around you. And unfortunately, when you get rich, a lot of people start to lose their humanity. And it's, as sad as it is, that's what happens. And then you've got guys like Gasparino and Richfield and, a whole bunch of others, not to name call, but I'm going to name call. Sorry, boys, you've done it to yourselves. It's pretty clear what their agenda is. So don't buy into it. All right, next DD question, because I've got about 25 minutes left before I'm going to shut this down.
I got a couple questions. Just kind of.
Let's go with Jess first, and then US Vet, Reaper. We'll go with you next. How's that? Oh, yeah, Jess.
Works for me, yeah. Just broadly speaking, obviously this can't be any kind of accurate statistical analysis, but all this talk about nobody likes to go to the movies, I mean, they were talking about it before the pandemic too. What do you guys see out there? I'm in a small city in Canada, 750,000 people, not a lot to do, but our theaters are sold out all the time, even the pre-ticket sales. So there's, I don't know.
You answered
the
it.
Stories I see don't jive with that.
Yeah. I think you answered it yourself. Is just
like, is that what you guys are seeing too across other cities, or is that just an anomaly to me? Like,
I haven't driven past a theater in a little bit, but I did go to one to watch the Jungle Cruise the other day, and yeah, it was quite busy. Now, mind you, I'm in the Niagara region of Canada, so we have certain restrictions, but I think there's a lot of other cities that have restrictions, and that's the only thing that's holding it back. But I think, the tremendous amount of blockbusters that have been coming out and the people who have spent the last year and a half. So here's my personal thought on this, and then I want to give everybody else a chance to speak, is, if you go through a year or 2 years or 3 years, what have you, of never eating a steak, but you used to really enjoy steak. Well, what happens if your grocery store starts to sell steak again? Let's say that your grocery store, was out of stock of steak for 2 years, 3 years. What's going to happen? You're going to get people really regretting the fact that they haven't had steak in a while. And they're going to start to want to have steak. They're going to like that. They're going to remember how much they enjoyed it. And especially with COVID, how it's really brought us together as families. I personally think that this, from a psychology perspective, it has brought me closer to my family because they were the only ones that I could spend time with and hang out with. It's made me less selfish of an individual. And it's made me realize that, it's the joyous things. It's the small things in life that we in the past have taken for granted. And one of those things is the entertainment of going out and watching a movie with your family. And I think that entire mentality across the board, by being restricted from going to theaters, has changed. And by virtue of the fact of what COVID is and how it's brought us together, has changed things. So I think we're about to see the re-rise of movie theaters, the re-rise of that social event space, bigger than anything. My personal thoughts.
So I'm not the only one then, yeah, because like I said, even before the pandemic, the theaters were always sold out, and if anything, I see more demand coming out of it.
What does everybody else up here think?
Yeah, I think that everyone's got an agenda when you see someone putting a one price target on something. That's just absurd. And absolutely, I drove past a couple theaters, and they've been packed every time. But again, I have my own bias, which is I really love AMC. So I could be this leading, but no, everything I've seen from an anecdotal perspective in the show I did go to, Black Widow was sold out. It's definitely not a 1 cent stock in my opinion, but again, that's my opinion, and everyone's entitled to their own. You have to make your own conclusion.
Sweet. Anybody else before we give US Vet Reaper a chance to ask his question?
Yeah, hey everyone. This is Dan. I just wanted to comment on the box office. So it's something that I've been tracking pretty regularly lately. One of the things that Adam Aaron had said is, if they can get to 5.2 billion this year in box office results, there's a shot that AMC could be profitable. So after this weekend, we're probably around 1.9 billion. But what I'll say about this quarter, and as you all know, we have pretty good momentum from the second quarter results, is that we've already surpassed second quarter box office results, and we still have, a month and a half left in this third quarter. So, I think we're getting there. We're getting there.
Dude, that is awesome. Can you do me a favor?
Sure.
Could you, if you've been tracking it, you actually have like an Excel spreadsheet or documentation around that?
I got a great link that I will tweet out that I
Please.
use. Yeah,
tag me in it.
Yep, I will.
That's awesome. Because, news like that, DD like that, that's what we want to share, right?
Yep.
That's what's going to help people with convictions far more, in my opinion, than saying, hey, we're going to moon tomorrow.
Right.
Brilliant.
Thank you, though.
Thanks, my man. Okay, US Vet Reaper, you've been waiting for a little while. Go ahead.
Hey, so thanks, guys, for hosting the space. A comment towards we can be better. You said something that sparked a thought in my head is, just in life, I believe everything happens to us for a reason. We're all here for our own individual reasons, but something, brought us all here. And just no rhyme or reason, things happen. And you can see the community has come together. So that's that point. And then second, I'd just like to ask JP a question about the Discord. It sounds like maybe you were saying you're trying to set up the Discord and it's going to be a free service to help people learn. Did I catch that correctly?
Yeah, absolutely. So I did hire traders that will be sending out their own alerts, and that will be monetized down the road. My alerts will always be free, and those traders will be posting summaries of every trade that they took at the end of the day, as well as the logic behind it. So if you never pay a cent, you'll get all of the instructional information, plus all of my trades. And then on top of that, if you want more, you're more than welcome to take a look at what the other traders bring to the table. But my big thing is I want to provide a place where people can learn how to trade, and that's going to be gamified with the whole bot that's going to capture their entries, and then eventually, if they become a very successful with their trades, I'll offer them the same position with the other traders. But no, my big thing is I'm always going to give more than I take. So my stuff will always be free, and everything will be completely out in the open. All the information. We already have one massive PDF out. I'm putting out my own. And yeah, I hope everyone likes my idea. And if you don't, let me know on what I can improve on, and we'll see how it goes from there.
Yeah, so thank you for that. And I'll just try to stay in contact with you because I'm only like 2.5 months into learning about investing in this play of AMC. But from the get-go, not knowing how to do anything, that's been long-term goal in my mind is to be able to set up some type of free financial literacy that would maybe start with like high school age kids and teaching them before they get out of high school, since the schools aren't doing it. But Triple X Marine kind of had that concept too, and I've talked to him. But moving down the road, I'd love to keep in contact with you about how to do that and how to keep it free and get people to that are willing to donate their time to teach people.
Yeah, that's my biggest thing too, man. Every trader that I did offer a position to, I made it very clear that they would have to put out their entire trades for at least once a week, the logic behind it, and also informational content. But at the same time, their time is valuable, so I did offer them compensation.
That's brilliant. I want to address that point as well, because I know, we've got a lot of people listening in the audience. And I know one of the common themes that I want to discourage people from getting trapped into is the whole idea of this person is making money off of the apes and that money would be better spent on stocks, et cetera, et cetera. You have to understand, number one, I'm taking 2 hours out of my day. I make a lot of money if I build you for my time. People would owe me a lot of money. And this is time that I'm dedicating and donating for free in all the cases. But if there's ways that I can, help support, now I don't need to. I'm stable enough that I don't really need to. But there are a lot of people out there who are trying to pay their mortgage. They're trying to feed their kids. They're trying to, make a life for themselves that is going to bring them out of, destitution or poverty or what have you. So never go negative on somebody who wants to make a small sliver of margin, a couple of bucks off of the information and the things that they provide. I think we can all honestly as adults look at it and see when somebody is only in it for the money. And that's where I draw the line, and I won't support that. But if for example, somebody has a YouTube channel and, they're accepting super chats, let them. Don't harangue them over that, right? That is everybody's individual decision on whether they want to say, hey, I want to tip you for the service that you're providing because you're helping me learn, you're helping me understand, and you're helping me grow. It's very, very valuable, and it creates a better ecosystem. It creates an ecosystem of learning. So just be aware of that, there is a big difference between somebody, allowing themselves to get paid for the hard work that they put in versus, just trying to shill the community. So know the difference between the two. Try and understand it, be a little bit understanding of it, because it's really important. And I think we have to be supportive of each other. Just like if you are putting out really good DD and good information and valuable posts, guess what? I'm going to share it. I'm going to make sure that it gets out there. I don't care if you've got 1 follower or 100 followers. We need to start, sharing people's voices that are providing value. It's so important. Okay, who's next on the questions? Because we've got about 15 minutes left before I've got a hard cutoff.
I got a quick question on the subject of learning to trade. If there's nobody else in line ahead of me, just before you switch subjects, let me know.
So if there's any more questions, this is not about my Discord. I do want to shut that train of thought down at this point. I'm happy to answer them in my DMs or at a different space call, but let's just stray away from that because this isn't supposed to be any sort of advertising.
Brilliant. Yeah, thank you, JP. Yeah, if it's a question that's specific to JP and his Discord, send him a DM, send him a message, send him a tweet. He's pretty good at responding to those, and we'll make sure that you get that information. If you can't get in touch with him for whatever reason, my DMs are always open. You can do that. But questions in regards to DD or due diligence or things that you've seen. Otherwise, I've got a couple in the inbox that I'd love to get to.
Yeah, so I sent you guys one. I actually had
one second, optical. Jules has actually been sitting here for a little bit. We brought her up a little earlier, and it seems like she has a question as well, and she hasn't gotten a chance to speak. So why don't we give her the floor?
Hey, thank you so much. Yes, I'm actually here at the hospital to see my mom. So thank you for letting me speak. I'll be really quick. And
before you go on with that, can everybody give some fists up in the chat? Solidarity for Jules's mom. I hope that she's not in the hospital with anything serious, but you've got our support, and I hope she's doing well and getting better.
Thank you. She has congestive heart failure, and yeah. So I'm just gonna And she and my dad have been married 60-something years, still in love, and so it's going to be tough, but we're going to enjoy the time we have left. So,
well,
anyway.
We're here for you for support if you need it too.
I appreciate it. Thank you so much. Okay, so I don't know if this has already been said or really stupid, but It seems to me like, and maybe we've already tried this, but getting Hollywood involved, because don't they make money off their movies being shown at AMC? Is there a way for us to like start tagging or reaching out to actors and actresses to help them get on board with us? I don't know. It's just a thought, throwing this out there.
I think it's a brilliant thought. I think anything that we can do to support the movie environment, to support the theater environment, and right now is the time. So if anybody out there has the ability, and maybe Jules, you want to take a little bit of a spearhead on this, when you have time, of course, family first, take care of that. But please, if anybody else has the opportunity to maybe put together a spreadsheet, would be my advice, of, you know, the actors guilds, their Twitter tags, their handles, the different actors, especially look at what's happening with Disney versus a lot of actors right now. And, you know, the upset of them putting, you know, the movies in on Disney Plus at the same time as they were scheduled for theatrical release. I think there's a lot of actors in the Actors Guild who are up in arms of that. And if we can create some type of co-solidarity where we, with our collective voices, tweet out, hashtag, have a campaign that says we support our actors, well, you know, the greater the chances are that they're going to support us as well and support our theaters. So there's lots of ways that we can do that. So if anybody has the ability to, you know, kind of create a spreadsheet, please do that, forward it to me, and I'll make sure that it gets spread out.
Yeah, I just think that would be great because they make money off. I mean, it would benefit them too. So
absolutely.
I think there's a lot of that going on in the background that we're already not even directly publicly aware of. Scarlett Johansson can't be the only one with a contract that says she gets bonuses based on box office sales. So keep in mind too, a lot of the streaming stuff that is going on, Disney's been pretty quiet after that first weekend because guess what? It comes out, it gets pirated, it's gone. They're going to need the movie theaters, I think, more than they realize to even recoup their costs and break even on these big blockbuster movies.
Yeah,
it's a very good point.
Yeah.
So, great point, Jules. Thank you so much for sharing that.
Thanks for letting me speak up, and thanks for all you guys do. Really appreciate it. I live in Texas, and I've been buying AMC since April, and I just keep buying and holding. So, gonna keep doing it. All right, thank you.
Thanks. Okay, who's next? Optical. I know you want to get a chance to speak, but we've got about 10 minutes left, and there's a whole bunch of new speakers. So if anybody has spoke already, I'm going to ask you to just hold off, and we'll get you in another call. If you haven't had a chance to speak yet and you want to, this is your moment. So Jake, you've got your hand up. By the way, everybody, feel free to use the hand raise procedure. I am paying attention. Go ahead and speak, Jake.
Hey,
and then we'll go with Rambro.
Hey, thank you, PB Jelly. I just want to jump in and kind of answer Jules' question. While we can reach out to Hollywood studios and actors and try to get these partnerships and build buzz around the Hollywood community, there are things we can do right now, which is go to the movie theaters and support the movies already being shown in AMC, like Free Guy. So there's things we can do right now proactively to support the cause. Go watch a movie or two at an AMC theater. Upgrade your AMC Stubs account. If you have the money, rent a private theater. Buy some gift cards for your friends. Make sure you're following AMC theaters and retweet whatever it is they're tweeting. There's a lot we can do right now that does affect AMC's success and growth. So, Jules, I really like that question. And, yeah, let's go watch some movies.
Yeah.
Brilliant.
That's great. Let me just say one more thing.
Sure.
My daughter, she's 20 now. She has cerebral palsy, and she's in a wheelchair. And so one of my reasons I love AMC is that was something when she was younger and still that she loves to do. But she could do that with her friends. She couldn't really bowl or skate or all that other stuff, but she could go to the movies with her friends. And so that's one of the reasons I love AMC and I support it. And
JP.
I'm so sorry. I was sending out emojis. Jules, please unmute yourself. I did not mean to mute you. I pulled the PB.
Oh, that's okay. I'm taking up y'all's time, but I don't know where you cut me off.
I think we got the general gist for sure that,
Okay.
Movie theaters, it's amazing when if you remember the first time you went to a theater, you remember it for life. Like it's an experience unlike any other that, so many people have as, one of those really heartwarming moments. So I appreciate that. And I hope that your daughter is doing well. I hope that your mother is doing well as well.
Thank you.
And you be
She's
good.
doing great. She's doing great. She's amazing.
Good.
All right. Thank you.
Okay.
Just real quick.
Yes, real quick.
I love that idea. Real quick. I love that idea. We can't collude to buy stock at the same time. We don't want protests and go to the movies.
Absolutely.
On a specific date, same time, whatever.
Absolutely. 100%. There is nothing wrong with that. That is well within our rights for sure. Okay, Rambro, you've been waiting for a little bit. Go ahead.
I just wanted to say in regards to the celebrity thing, like I think in their contracts they're not allowed to promote specific theaters like one over the other. And then also it might be a conflict of interest for them because they invest their money in hedge funds. They act, they make money, they invest, and it might be against their best interest for their money to be, washed away by these giant hedge funds.
It's possible, and they may be shorting stock themselves, right? We don't know. But I think one of the things that we can do, that's a very good point, Rambro. You're absolutely correct on that. So let me give you credit for the point. And then let me just counter it slightly with the idea that those are things that we cannot control, right? But what we can control is supporting our theater. And if we posit these messages in a way that says, hey, actors, we stand behind you, we stand behind you, we stand behind you, then it gives more incentive publicly for theater goers to support those actors and for those actors to support the theater experience. So it creates that. Whether they're actually saying go to an AMC theater, we'll leave that to Adam Aaron with his $2 billion sitting in the bank account to go and buy up all the theaters that just became profitable because Hollywood is pushing that idea. But I think it also puts out eyes onto the whole theater movie-going experience. It drives people to the theaters. If your favorite actor and actress in Vogue magazine is coming out and saying, hey, you guys should all go to the theaters, well, guess what? That is really going to increase ticket sales. So there are positive things. But to your point, Rambo, I think, which is the point you were making, very, very correct. Don't think that this is going to be an absolute catalyst for things, right? There are certain legalities, there are certain ways, and we cannot guarantee that all the Hollywood actors are going to band together behind AMC or behind theaters in general. But I think it's a good idea. It's got some serious legs to it if we can get it going. And it'll ultimately flow into positive. Okay, who is next? Because I've got 3 minutes left, and I want to have 1 minute at least before the end to thank people. All right, Optical, it's on you. I know you were waiting and you were patient and let other people speak, so I really, really want to give you some appreciation for that.
Awesome. So I actually sent you guys a question because I thought I wasn't going to be able to hop back in here. So I'll clear that out of the way. But Jules, I sent you a DM. Back before I left Twitter the first time, I actually had Bob Saget tweeting me. So he acknowledged the apes through tweets. And there's an actress named Darcy Donovan who actually followed me first for whatever random reason. She hopped in my big space call yesterday, and she's actually pro-Doge and AMC. So they are starting to come out.
Sweet.
But the question that I sent you guys was, it's more so JP, because I know my option knowledge is limited, and I know at the beginning you said yours is a little less than JP's too. You guys were harping on it right when I sent it, and I was like, please see it. With SOFR going active the first trading day of January, every derivative will have to have a piece of collateral attached to it. So I was hoping JP could be like, great news. Like, hopefully he could jam that point home.
Yeah, that's something I definitely have to look into.
Me too.
I don't like to I don't like to come. I did see your message, Optimus. It was just I don't have enough knowledge offhand to jump into that one. But I'll definitely look into it, and as soon as I feel comfortable with my knowledge base, I'll put up my sentiment.
Can you also make sure with that, because I'm not familiar with that. I mean, I do a lot of research around the rules and the regulations, but I only have one set of eyes There's 2 of them. One set, 1 + 1 = 2, and they're constantly on focus with something. So there are a lot of rules and regulations and procedures, everything like that out there that I may miss. Please send me a link to that because that sounds interesting. It sounds very much in line with what's happening with the URM rules that I recently posted about. But yeah, give me the information in my DMs, Optical.
Okay. And then
Thank you.
Just the last point to that, the guy who actually helped make that into like a thing, he's now being nominated for so he's been the acting chairman of the derivative regulation team.
Mm-hmm.
But the federal government's actually nominating and putting him in actual power Monday.
Sweet. Please send me all those details, any of that research that you have. It'll help me get up to speed quickly.
Awesome.
All right. Guys, gals, whatever your pronoun is, he's, she's, z's, zeds, it does not matter. I respect and I love you all. I am ecstatic right now. I think for my first space call with you guys, it has gone exceptionally well. We've had lots of people coming up, asking questions, speaking. I think by the end of it, we really got into a vibe where people felt comfortable coming up, asking questions. I have about 16 inbox messages from people that I didn't get to. Actually, it's more than that. From people in the audience that I didn't get a chance to. Please bear with me. This was my first space call, at least first one running it. And I don't want you guys to feel like your voice was kind of trod on or missed or glossed over. That's not the way I like to do things. But I am going to be going through all of those and I'll keep them in mind. And maybe the format of next week's call, if I don't do one during the week, will be to actually address those questions in tandem with other questions that come up. So I really do want to thank you guys all for being patient with me, for understanding that it's my first time doing this process. And for those of you who did have the courage to come up or the courage to even send me a DM question, I really, truly appreciate you, as does the community. I think that's the one thing, the final message that I want to get across is I wanted this space call to be something that we could collectively get together, discuss some of the DD, discuss some of the confusion around things, because there's tons of different elements of misinformation and misdirection and misunderstandings that happen out there. And this, I thought, was an appropriate forum to kind of get some of those details out. It's a long-term process, guys. Obviously, we're not going to be able to solve everything on day one, but stick with me. And at the end of the day, if we keep doing things like this, we're all going to have more wrinkles in our brains and just be better at the end of it. So I wanted to thank you guys. I did hear somebody jump back up. Let me just check before I do this. Duchess Dell, I know you want to get up and speak. But unfortunately, I had a hard cutoff time of 3 o'clock because I've got some other things that I've got to rush off to. It's already 3:01, so I'm not going to be able to get to you. My deepest apologies, but I hope you guys understand that my life is insanely busy. If you guys can, give the love, spread the positivity, spread the messages we talked about today, be balanced in your train of thought throughout the course of the next week. I think you guys will be much stronger for it. We'll all be much stronger for it. And I'll love you for it. So if you want to reach out to me, all you got to do is tweet. It's as simple as that.
Hey, everyone. Throw up 100 in the chat for PB here. I've never seen a space call so well organized, and it's just we're absolutely blessed to have someone with so much knowledge and expertise willing to share his time for free. I can't stress enough how highly I think of PB&J and everyone in the ape community that I've had the pleasure of actually discussing things with. Again, thank you so much, PB.
No worries. And thank you as well for helping to manage things. Really, really appreciate it. But I do have to run. Love y'all. And I will catch you guys later. We'll see you in the next one.